Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view, using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me now introduce today's longer term chart. Today I'll be looking longer term at New York Sugar. Now, looking back at 2020, the year 2020, it was that rarest of beasts, an annual key reversal up, the set stage for 2021 and all the years following, with the exception of possibly late 2023 and of course 2024. Prices moved up from the lows of 2020 up through the more important 50% absolute Fibonacci line for the 21st century at 1809. This was all done properly by September of 2021, but then the market started going sideways, breaking through the extension of the 2019 to 2020 diamond pattern uptrend trend line in December 2021, but then not going lower as a follow-on, just sideways. Initially, this was a bit of a disappointment to the diamond bottom pattern of 2019 to 2020, as this had the potential target X for the pattern in the 2140 area. This was a full and secondary harder to reach target for the diamond bottom, as the primary target in the 1910 area was easily reached in 2021. Anyway, target X was finally reached in January 2023. This was not all, as the sideways action over September 21 to January 2023 set up the conditions for the market to consider it as a bullish halfway hesitation, and prices duly rose throughout 2023, reaching target X1 at 28 even, the final target of this move in November of 2023. However, after reaching that target and exceeding it just ever so slightly, prices instead chose to drop away in a 2 steps down and 1 step up action at the start of the year through to the end of August 2024. In falling, the market had constructed a double top pattern over 2023, an Adam and Eve double top. Now, the primary target of this fall at target X2 at 1880 was reached by May 2024. And that still left the secondary and harder to reach target X3 down below at 1660, still alive and open. So why have we not seen prices at least attempt to move down to those levels? Well, I think the market has attempted to move lower and will stage further attempts lower, but is being held up by 3 separate supports. These are the gold highlighted 5-year moving average, currently at 1902, which throughout 2024, especially the middle part, has held up the market and looks to be challenging again in the next few days. Secondly, the earlier 3-year moving average at 2132 had also helped halt and slow the decline, but it has come down to the 5-year moving average to make a strong stand. Now then, there are 2 separate 50% Fibonacci lines. The recent 50% Fibonacci line for the 2020-23 move at 1860, and then the previously mentioned 21st century 50% absolute Fibonacci line at 1809. These 3 separate supports have slowed and halted the decline seen here, though I am doubtful as to how strong they may, in the fullness of time, how strong they may turn out to be. As prices seem determined to try and even lower, we now have an interesting amount of ammunition overhead, also close to the market. The key, I suspect, will be whether prices can sustain the lows of 2022 in the 1720 to 1740 zone. If they cannot, then not only will target X3 at 1660 be achieved, but lesser Fibonacci lines, Fibonacci supports at 1634, and even the 61.8% 21st century absolute Fibonacci line at 1383 may be under threat as well. Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.